might think there's not been much merger and acquisition activity in South Africa over the last couple of years, but you just have to look at what Brait has been doing, particularly in the United Kingdom, buying fashion retail outlets and gym groups. And KagisoTiso Holdings has also been very active just this week, announcing that it's bought a stake in a business in Nigeria in healthcare diagnostics. It's also recently bought a stake in Servest. But not only that, Blackstar, which is listed on the JSE, has also recently just bought a stake in KagisoTiso Holdings. So joining me this evening on the MoneyMakers is the Chief Investment Officer from KagisoTiso Holdings, that's Jacob Hinson, and Kevin Derrick. We'll get to you in just a moment. He is the Chief Executive of Servest in South Africa. Jacob Hinson, explain to me, please, just the lay of the land in terms of KagisoTiso Holdings, because it's had a magnificent and quite significant metamorphosis in recent months.
Thank you, Bruce. So as you'll recall, KTH was formed in 2011 after the merger of Kagiso and Tiso, Kagiso Trust Investments and Tiso Holdings. Shortly after the merger, we spent quite a bit of time, setting out the strategy. And one of the few, or the early transactions that we did was the take private of Kagiso Media, which we did probably around 2 years ago. We followed that up with an investment in Ghana, Fidelity Bank, where we took a large minority stake in that bank. And recently, as you mentioned, we took a controlling stake in Servest, followed by the MoneyMakers deal in Nigeria. Our strategy is really around building pillars in key sectors that we want to be invested in, and expanding outside of South Africa into the rest of the continent as well. So that's what we've been doing in the last 4 years.
Is it too narrow to describe it then as media, as financial services, and then in the sort of, I suppose, with the Servest perspective, in venue management and that sort of thing? How would the pillars work?
Yeah, probably about 5 pillars. I think financial services is the obvious one, with our large investment in MMI, where we have approximately a 7% stake, followed by the investment in Fidelity. So that completes the financial services pillar. You then have the media pillar, and as you rightly mentioned, we now own 100% of Kagiso Media, and through that business, we hope to invest in other media businesses across the continent. Servest would clearly form another important pillar in the services arena for us, and MoneyMakers in the healthcare space forms another pillar. We are currently in the market looking for additional acquisitions in the broader consumer space, so that would complete, call it the fifth pillar for us.
The MoneyMakers acquisition is the most recent one in Nigeria. It's in the diagnostics business. Now, you've got to explain that to me, please, because every GP's office I've ever been into is a diagnostics center. What does MoneyMakers do differently to what my local GP does? Sure.
So the Nigerian market is slightly different. So what MoneyMakers does is it takes what a lot of GPs would do here, takes from the hospitals and actually processes these call it blood samples. It does cancer screening, it does dental screening. So it basically diagnoses across the healthcare space in Nigeria. It is also recently launched, or is about to complete the first really integrated oncology center in Nigeria. It's going to provide chemotherapy, it's going to provide radiation oncology services across the country. So we really believe that, given its position, it's going to be a significant player, not just in Nigeria, but across the continent once it completes, particularly the oncology center.
How active is KTH as an investor then? You've got lots of minority stakes in lots of different businesses, control of Servest, but lots of minority stakes in a lot of businesses. Just how much leverage do you have within these businesses?
Yeah, so there's a legacy as well, Bruce, that's important, and that is that post the merger, we did have a lot of businesses with small minority stakes, as you mentioned. But as we've evolved, we're taking slightly larger stakes in businesses. I think stakes that allow us to have significant influence in the businesses that we're invested in. So we ensure that we have active participation at board level, at the various subcommittees in which the business has, and through that we hope to influence the companies that we're invested in. we do not operate businesses, and we don't purport to be runners of businesses. But certainly we believe that we have a lot to add, whether it be from an M&A perspective, whether it be from a strategic perspective, and we ensure that we get the necessary representation on the various subcommittees.
Now, Brait got lots of money by selling Pepkor. You got lots of money because Blackstar has bought a big stake in you. Are you burning through that capital through acquisitions? What is the plan?
So just a clarification. So Blackstar didn't actually inject additional capital into KTH.
Okay.
They invested as a shareholder, correct. And our cash has come from a variety of sources. One is we've been able to make some disposals over the last 4 years where we've raised significant capital from those disposals. We've also got a bond program that allows us to tap the debt markets as and when we need, and we've got significant cash on our balance sheet. So yes, we have burned through quite a bit of the cash, but we certainly believe that for the next 2 to 3 years we have sufficient firepower to allow us not just to do new deals, but to support the companies that we've invested in to expand and themselves make additional acquisitions.
Kevin Derrick, let's talk to you because Servest, a lot of people have lost track with what's happened with Servest. You're a facilities management company nowadays, amongst others. You manage FNB Stadium, you manage the Houses of Parliament, you've got a contract with the Houses of Parliament as well. You've got a 51% shareholder with KTH, which should open up a whole new avenue of service business to you, particularly in the public sector, I would guess.
Yes, Bruce, you're correct. Now, we're very, very strong in the private sector, and this gives us a great opportunity to grow our business yet again in new markets. We're very excited about it, notwithstanding the fact that I think KTH will bring together a great partner for us to also do more in Africa. Now, we are now in 10 different African countries as well, and this gives us a great opportunity to expand into Africa further. Very, very exciting for us. We love the fact that we've got a new partner, and we're looking very forward to our future together.
50% of your business is UK-based, the other 50% is Africa-based. Are you a British business or a South African business or an African business?
Perhaps I should remind you that 51% of the UK business is still owned by South Africa. The UK business was started out of Southern Africa, and we continue to be owners there, and I'm sure that's one of the great reasons why KTH got quite interested in what we were doing. Now, the business has grown substantially over the last number of years. We now, in Southern Africa, employ 30-odd thousand people. As a group, we employ near to 50,000 people.
It's a substantial business then, and of course, everybody knows the Bidvest business really well. Servest has been a little quieter, perhaps, than Bidvest has in recent years. Is this the salvo, the challenge now to Brian Joffe's Bidvest, that Servest is back in the game and is ready to start taking some contracts away?
Bruce, we've always been in the game, properly in the game. So ultimately, we compete with the likes of Bidvest in the services sector, which is what our speciality is. Bidvest do many other things as well. So we certainly don't purport to be anything near their size, but in the services sector, we compete extremely well.
And with an empowerment partner the size of KTH behind you as well, that gives you an edge that perhaps Bidvest doesn't have in the public sector, certainly?
Well, certainly I think we're first to the market with a true BEE partner, which I think is going to give a massive advantage to us in the marketplace. And as I mentioned earlier, we are seriously excited about it because it's going to meet a lot of the criteria that our clients need. And I think that for us gives us an edge.
500 million rand is what you've got at your disposal for acquisitions in the capacity as Servest. Is that a pan-African acquisition strategy with all of that 500 million, or do you spread it around a bit?
Look, over a number of years, we prefer to spread that around a little bit. But ideally speaking, one wants to take advantage of the African growth that we can do. Certainly Africa is an exciting place at the moment, and it's going to continue to be an exciting place to be in.
Recently, let's talk back to you, Jacob Hinson, Chief Investment Officer at KTH. I've recently been reading a book called Africans Investing in Africa. And a lot of South African companies, probably a disproportionate number of South Africans, doing cross-border investment on the African continent at the expense of many other African economies. We're ahead of the curve on this. But what is the sort of waiting period where other companies are looking to Europe, are looking to hard currency, either sterling or euro or dollar earnings? What is the strategy from a KTH perspective in terms of an Africa growth story?
Yeah. We have a very large South African-based portfolio. Most of our companies, as you know, 2 years ago, we were 100% South African. What we decided to do is, the rest of the continent is a continent we understand. We've got investment professionals that have operated on the continent, and it's probably easiest for us to target Africa as our core market. So what we decided to do is firstly to invest directly as KTH, so we will deploy capital off of our own balance sheets, but also to influence and encourage our key portfolio companies to expand onto the rest of the continent. I think what you're alluding to is the difficulty sometimes in getting deals consummated on the rest of the continent. It is a patient game. We don't expect to go in and immediately conclude a transaction. You have to spend quite a bit of time working on building relationships with your counterparties. So I think over the next 5-10 years, you'll see a significant component of our overall NAV, net asset value, coming from the rest of the continent, both directly as KTH and indirectly through our various investee companies.
Jacob Hinson, thank you very much. He's the Chief Investment Officer at KTH. Lots of exciting times ahead. And then one of the companies in which KTH has taken a controlling stake, that is Servest, and the Chief Executive of Servest in South Africa, Kevin Derrick, in studio this evening also with Jacob Hinson. Gentlemen, thank you very much. From those Moneymakers, thank you for watching the Moneymakers tonight on CNBC Africa. I'm Bruce Whitfield. Thanks for watching. Good night.